Hey everyone, welcome back. I'm Jeremy Szafron. Well, gold back around 3,300, regaining strength after a volatile stretch. It sought briefly clear 3,500 earlier this month. Now, while some analysts called for a steep correction that hasn't materialized, instead we're seeing that tight consolidation with strong support holding above 3,200. Now, the dollar remains under pressure, down nearly 10% this year, and that's been a major driver for gold strength. And at the same time, yields are unstable. The bond market is flashing concern, and the Fed just confirmed in its May minutes that inflation risks are rising again. Now, the Fed held rates steady at 4.25% to 4.5%, but acknowledged that tariffs and structural deficits are now reshaping the outlook. Staff forecasts now show weaker growth into 2027. And while the Fed says inflation expectations are, quote, somewhat anchored, several participants warned that long-term trust in monetary policy is starting to erode. Now, all of this has helped keep the safe haven demand for gold elevated, even as equity markets flirt with new all-time highs and NVIDIA earnings drive tech euphoria. Now, we've entered a phase where macro uncertainty is clashing with trader psychology, and the charts are telling a story few are talking about. One guest that's been ahead of that story is, of course, our very own Gary Wagner. He called this exact move 3,300 to 3,500 and emphasized that the $3,200 zone would form a strong technical floor, and that's exactly what happened. So what's next? Let's chart it out. Gary Wagner joins me now. He's the editor of thegoldforecast.com and one of the most consistent technical voices in the space. Good to see you, my friend. Nice call, by the way.
Thank you. Great to see you. An interesting scenario playing out in gold. But there were a lot of analysts that were looking for a much more complex and deep downside move in gold, because the significance is literally we've seen gold move from, call it about $2,600 back in November of last year, up to these record highs. And yet we found support tentative, because that might not hold, at around 3,300, which is roughly where we're sitting right now.
Okay, I got to ask you, because, you heard me in the intro here. You've been very accurate all year, Gary. I mean, our viewers know you well. You called that $3,500 breakout. Gold then hit it. Now we're consolidating around what you just said, 3,300. So is this base building, or is the setup for another leg higher? Where are we at here?
Well, we'll take a look at a chart. It is basically a daily chart of gold futures. This right now represents the June contract month. And you can see that I've really put in a couple of studies, a Fibonacci retracement long-term data set from 2617 up to the record high, and then another data set starting from the lows back at the beginning of April at 2967 up to the highs. And we get what we call confluence. Confluence in a Fibonacci retracement data set is where you're using two different variable time bands, and you get a price point that comes in at a significant Fibonacci number. So, for example, the lows that came in the middle of May at around $3,166 were both a 61.8% retracement from this short-term data set and a 38.2% retracement from this much longer-term data set. Now, we did see gold move back up, and right now we are really at a key level, which is right around 3,300. And you can see that there's two different data sets saying that this is significant. The 23.6% and the 38.2% are both alluding to 3,300, providing strong technical support. So when you look at that and the fact that we're above this purple line, which is the simple moving average, it's a 20-day, and then we look at the stochastic oscillator to really give us an indication whether gold is oversold or overbought. It is not oversold at this point, with the percent K and percent Ds at around 50. We would look for a potential top once or if they move to about 80.
Interesting. Okay. So, I mean, those analysts that were expecting that larger consolidation or a little bit of a correction, I mean, where are they at? Have we seen is the consolidation still taking place?
The one thing that we can say is that gold has become range bound rather than strong trends either up or down. If you consider that since pretty much December of last year, we've seen gold go straight up with two very, very subtle corrections. The first one, April 7th, the second one more recently, May 14th. And in both occasions, these corrections were not deep by any means. What I believe we're seeing is we are seeing continued central bank buying.
Okay.
We are seeing good consumer demand. And right now, the weakness that we've seen recently has been where the current administration's negotiation in terms of trade agreements with different countries are kind of coming through. So depending on how much headway the negotiations of trade deals picks up or drops off, that's really what we're looking at. And the other thing that is going to be important is going to be at the end of the week, which is the most current PCE. And that, of course, is the preferred inflation measure of the Federal Reserve. And that will help guide them in their next monetary decision.
Yeah, well said. And of course, we had those FOMC minutes coming out today. We just talked about it in the intro, and gold remaining quite steady. We got to talk about the DXY versus gold, because obviously you got a chart and it's bounced off 99, but still down 9% this year. What's the next level? And more importantly, what would a dollar rebound mean for gold?
Well, obviously, if the dollar finds support at the current recent lows that came in, very, very recently at around 98.73 on the dollar index. The next level of resistance comes in at 100.75 and then again at 102.492. A move to either the low area above 100 would not be that significant. That could be met with consumer demand. In other words, dollar strength, if there's buying in the market at the same time, kind of cancels each other out. A strong move to about 102 would decrease the value because it's paired against the dollar by about 3%, and that would be much more significant. The key is, you correctly pointed out, the dollar has absolutely been in a free fall from January 2025, when it was sitting at 109 down to 98. That's 11% drop in the dollar itself. And that was one of the most significant components of the recent move higher in gold.
Yeah, I wonder, sometimes you look at that chart and you kind of zoom out a little bit, and I'm curious, has gold started to decouple from the DXY?
Well, it can never completely decouple because it's paired against it. At the same time, when you've got the investment community being strong sellers or strong buyers, if they're strong sellers and the dollar is moving up, it's going to magnify the intensity of the sell-off. In the same time, when we've seen this incredible dollar weakness coupled with buying by retail and institutional traders, that certainly is what took gold from relatively low levels in the middle of April. And the one thing that we can see, I pulled up a different chart. It's still representing June futures. The one thing on the bearish side is that we can see these recent tops in the market. We've had a series of two lower tops or lower highs. That does say that we are seeing this range compress. And at the same time, we have to acknowledge strong support at approximately $3,175. That is the 61.8% retracement of the small data set. So we have a compressing range. We have seen a series of lower highs, but we have strong support at about 3,200 and a little bit below. The question now is whether 3,300 will hold. And as I said, the key to that is going to be the news that comes out about the trade negotiations by the administration. If they continue to alleviate the fear of trade wars, global trade wars, of course, that cannot be bullish for gold. If they stall in a certain way or slow down, then we could see the momentum pick up. And the other thing that we're going to want to watch very closely is inflation, because as the minutes showed that were released today, the Fed is very concerned about a uptick in inflation. And if we get another reading that shows that inflation is continuing to grow, that is going to affect the Federal Reserve's next monetary decision.
Yeah, lots of unknowns within the market right now, including those FOMC minutes, which, it's been very stable, gold today. Not a lot of people selling. Pretty interesting. You talked a little bit about that $3,300 mark. We're sitting here. It seems like it's range bound, as you called it. I didn't hear it. What was the next key resistance level? And then talk to me a little bit about whether or not that outlook is, are we going up from here, or what invalidates that bullish setup?
Well, we have to acknowledge that although the market has come down a bit, it is still in a fully bullish momentum and demeanor. And what I am really looking at is this 50-day moving average, because traders look at prices above the 50-day moving average as being in a short-term bullish trend. Below it is bearish, of course. So we are above that. We did come down and form a bottom at around 3160, but bounced right off of that. And the one interesting thing is that when you think about what happened on Friday, where the market was up, $50, $60, and then yesterday it took it all back. We got that whipsaw, and that whipsaw has just been over the last 2 days because we had the 3-day holiday weekend. And now we've got kind of a wait and see attitude. You can see not very much movement today whatsoever in terms of range itself. The high 33.24, the low 32.86. So not a tremendous range in the market. It is still, technically speaking, solidly bullish. And if that's the case, to answer your question of where are our next levels of resistance, we are currently seeing resistance being the high that came in around 31.50. Above that, we're starting to look at the all-time record highs and some of the closes. The all-time record high, 34.40, 34.41, achieved on May the 6th, is the number you want to see on a closing basis. Of course, above that is this one, what we call a wick, meaning on an intraday basis, we saw gold break 3,500, but it's never closed in that area. So that's not significant until we see gold break back above 34.40.
It's interesting. I was talking to so many analysts, and they're almost waiting for this kind of sell in May pattern that we kind of wait for every year. But the equity markets, they're ripping. Is this traders, is this traders market heading into summer, or could we still see that classic pattern as we wait for retail investors to come back?
Well, we are absolutely into summer trading now. That just really began.
Yeah.
But as you correctly pointed out, you've got the equities markets on fire. You've got still the safe havens such as gold, relatively strong. And so that tells you that although the institutional as well as the just regular traders are hedging their bets, keeping a part of their positions in gold. In fact, I think Goldman Sachs is continuing to recommend that their traders continue to be fairly aggressive in allocating in gold. Central bank buying in gold is in an accumulation stage. That continues. So you have the hedging of safety, and at the same time, you've got a very strong equity market. Yeah. That put together is what I would look to see throughout the summer. And I think that gold has the opportunity to at least hold pretty solid at these levels. A break, we're going to look at 3,200, a significant move, 34.40 to the upside.
34.40, everyone waiting for it. I got to ask you about real yields in the Fed here, because, gold's climbing even without Fed cuts. Is it ignoring real yields now?
It is really reacting to uncertainty.
Yeah.
And that uncertainty is diminishing because there were great unknowns when the tariffs were first implemented by the administration as to what the fallout could be. Because if it all went the wrong way, we could be facing really dramatic inflation, diminishing returns in equities, and a GDP that was contracting. And the fact is, we haven't seen that. The fact is that the trade negotiations actually seem to be working out in a positive light, meaning that the United States has set itself up to get a better deal in terms of reciprocal tariffs country to country. And so that uncertainty factor that was driving gold tremendously higher seems to be diminishing. And that's where we saw the weakness come in.
Yeah.
And the key, the linchpin, is going to be on how the trade negotiations develop on an ongoing basis. Because in terms of geopolitical conflicts, which is the other thing that gold is very sensitive to, the major hotspots are still hotspots. They're still in the news cycle, but they don't seem to be dramatically affecting the price of gold.
Yeah, Gary, I got to ask you too. I mean, we were talking about some of that economic data coming out, and obviously the Fed today saying maybe, inflation will be around for a while longer. If PCE ticks up Friday, do you expect gold to spike or fade?
Well, that's actually an interesting question, because higher inflation would cause the Fed to possibly consider reacting. And the only real strong tool that the Federal Reserve has to combat high inflation is to raise rates, or in this case, not to cut rates as we've been anticipating the first rate cut of the year. And so that would affect the forward movement of interest rates or the outlook on them, but we'd have to see a pretty strong uptick in inflation for that to really generate some concern.
Yeah, well said. All right, we'll leave it there. I appreciate you making the time for us. As always, Gary, good to see you. Hopefully, we'll have you back in a couple of weeks. Obviously, you can go and check out Gary's latest right here at Kitco, as well as thegoldforecast.com. Thanks, my friend.
Thank you very much for having me. Bye-bye.
Appreciate it, as always. Gary Wagner with the call once again. Gold holding firm at around $3,300, maybe setting up for the next breakout. Let us know what you think. Is $34.50 next, or is the market running out of a bit of steam here? Drop your thoughts in the comments. Make sure to hit that subscribe button and tap the bell so you don't miss on what's coming next. More sharp macro insights and expert technicals right here on Kitco News. I'm Jeremy Szafron. See you next time.